Welcome back. We're here with my co-host, who is Bill Hubard, Chief Economist.
Chief Economist, yes.
Trade.com, I couldn't get it out. And somebody making his debut on TIP TV, Dennis de Jong, MD of UFX. How are you today, Dennis?
Good morning, I'm fine. How are you?
Did you say UFX or UFO?
No, it's at the moment it's still UFX, and you've flown in all the way from Holland, is that?
Yeah, with a UFO.
What a UFO!
Yeah.
Right, we're in the run-up to the non-farm payrolls tomorrow, the biggest event on the calendar. Is that what you're focused on, or is there anything else which is in your mind?
Absolutely, but I think even before that we can look at the ADP numbers today. They're coming out. They're actually expected to come out a little bit higher. The consensus, and if we're reflecting back to last night's minutes from the Fed meeting, I think we do see that there are three main criteria which the Fed will focus on going forward, deciding whether to increase the rate or not, or to push it next year, which one of them is, of course, economic growth, employment rates, and inflation. So I think the eyes are going to be definitely on the non-farm payrolls tomorrow.
But the Fed's so bearish, so dovish, rather, bearish, the market's so bearish, but the Fed's so dovish, it really is, I mean, they're totally on that trajectory, and it doesn't look like anything can change them.
I think times are tough for them. You know, there's a lot of uncertainty in the market. They already focused on the last meeting. We know that Brexit played a big role for them. They were conservative. They wanted to see what's happening to the economy, and to be honest, in the last 2 weeks, uncertainty is very high.
Yeah, but they're scared of everything. I'm probably scared of the dark. I mean, it's like probably when they go to sleep with the light on. I mean, that's the there seems to be a lot of fear there. I mean, is that
it's uncertainty, of course. There's uncertainty, but it's amongst all the central bank governors. It's not only related to the Fed.
I mean, from my perspective, which is the cynical one, the reason they are like that, scared of the dark even, is because they've come up with this policy for the last 7-8 years. It's going nowhere, and now we're at zero rates or negative rates, and there's nowhere left to go.
Yep, you're right. You know, we talked about we spoke about this probably half a year ago, whereby we said actually the incentive of the Fed is to raise rates so they can afterwards lower them again. But they've missed that point because they're waiting, and they were being too dovish already 3-4 meetings ago, saying, okay, we might look at some inflation picking up, we might look at oil price picking up, and then we can higher the rates. In other words, it was priced that there should be 2 rate hikes until the end of the year, which actually hasn't happened.
So, I mean, as I was talking to Zach, I mean, ever since June of last year, okay, Fed fund futures, like the Fed, have gotten overly dovish, okay, because they missed the boat. And we're talking about, you know, 0.5%, okay? I remember when base rates were 13, 14, 15%, and, you know, if we can remember that slight problem when we were blown out of the exchange rate mechanism, we had 4 rate decisions in one afternoon by the Bank of England. I mean, and as I mentioned to Zach, I think it took, you know, the rate hike last December, it took till February for some of these new masters of the universe who are still probably in their early 20s. Grandmother, what does a rate hike mean?
Yes. Many of us, or many of the younger generation, hasn't witnessed it. And I believe it was Volcker who was quite aggressive in raising hikes. Yeah, in the 80s.
Still alive as well.
Yes.
But I mean, do you think that on the currency front we're going to have basically the race to the bottom? I mean, that eventually the dollar will weaken as well, but when people realise that their policy is totally, you know, going for zero. I mean, is there going to be some end of 2016? Parity with the dollar, the sterling, and the euro.
That would be a very interesting scenario. Absolutely. Now, I think what we're seeing now is really it's a repricing of risk. And after the Brexit vote, there's been it's been very dovish and hawkish. And in the recent days, then there was a period of where it picked up again. People became more positive, thinking it was an overselling. Now people are realizing there's still so many things we don't know about the Brexit yet, and everybody's trying to get handoffish. Okay, so I think that what we're seeing is the shift into the US dollar. It's not related mainly to economic reasons, although the economy is all right. It's just a flight to safe haven. I want to pull out my money, I want to get it back to the US and just keep it there to see.
Mean, what you're talking about, I mean, 2 weeks ago, pre and then post-Brexit, okay, the safe havens were Japanese yen and Swiss franc, okay? Look at the change in that just in 10 days, okay? Yes. With the way the Swiss National Bank has reacted, and the Bank of Japan says, we'll get around to it next decade.
Yeah, absolutely. I agree to that.
And the perspective, you know, you're in the proper part of Europe, on the continent. Has there been a marked change in the perception of the UK from there?
I think the general feeling I get when I speak to business people and also in the banking industry, it's a feeling of sorry. the story that it actually happened that way, and that the vote was called, and there was just such a gamble on the European project altogether, which is it's a pity, and we don't know the effects yet. I mean, from the banking industry, which is contributing, or London is contributing 30% of your GDP. Okay, what's going to happen with passporting to other European countries? What's going to happen to the banking sector? You're being courted by the French government. The French has always been a little bit adverse towards banking and financial industry. They would like the British bankers to come over now. So many things are probably changing now.
Do you really think the British bankers are going to go to Paris, where they can't speak the language?
Maybe not the British ones, but maybe the Portuguese and the French and the Germans. There might be some people moving.
Right. Well, I think they're probably better for them to go to Amsterdam, actually, or to go. I mean, at least more people speak the language.
So we're not talking Nexit, are we, with the Netherlands?
No, hope not. No.
No, but you speak about the European project. I mean, it's not actually looking very good at the moment, is it? You've got Deutsche Bank, which is trillions, in debt. I don't know. I mean, we don't even know. It's just a black hole. The oldest bank in Italy about to go down.
Third largest bank.
It's not exactly been an economic miracle over the last 5 or 10 years, has it?
It's not been, and I think that these are actually one of the new concerns having emerged in the last week or so regarding the Italian banks, because we do see problems there with loan portfolios in the Italian banks, and I would assume there's still some more unsettling news to come out of there. Yes. The second thing, which I really see playing a big part in the markets now, is the news about the UK real estate property funds. And although it might seem now like it's a liquidity mismatch between people wanting to withdraw their cash or investor wanting to pull out their money, and the funds being able to sell the property to finance that cash, I think this can result into a quite dangerous situation.
So much of that money that has been withdrawn have been by foreigners, okay? So they're saying, yes, I know it's happened, but they're concerned about the 15, 16, 17% depreciation of sterling. So what they're trying to do is just protect their money rather than pulling it out because of
Who designed that lobster pot? I mean, it's you've got all this regulation, and then just there's an event, and then it's as if we don't we didn't regulate for the property funds. It was a disaster waiting to happen, wasn't it?
Isn't it called PPR?
But the beauty of the regulators, they're always one step behind on these things. So now they'll come in and say, property funds have to be regulated properly, and there has to be a liquidity matching every day, and it has to be done properly. But at the moment, it's a car crash, isn't it?
Yeah, but you see, are they properly marking the market? Okay, and let's go back. We're talking about the Italian banks. The thing that saved the Italian banks is, if we can remember back in 1999, okay, with the consolidation, in this less than a month, okay, Italian BTP 10 years with Bund 10 years, okay, they closed 900 basis points in less than a month because they had to converge, okay? That was the bonanza. Now, 15, 16 years later, whoops, we're having to mark the market. And we saw this several years ago, okay? If you looked at the banking stocks in Europe because of the Brexit prices, what took the DAX down was the mark-to-market of the European banks, okay? And the same thing's happening now, strictly with the Italian banks.
Yeah.
So just as a final thing, what are your clients at UFX doing? How are they positioned at the moment?
No, I think that we've seen a very interesting development around the Brexit vote, actually, because we're offering our traders something called Mass Insight, whereby they can look at other traders' positions on an anonymous basis, obviously. And what we saw is that our traders, before the Brexit, they were positioned more neutral than the general market was. So what happened to them is there was basically no big losses or gains because it was sort of priced in. So the reflection of the positioning of the clients long versus short in different currencies was more according to the opinion polls than rather than how the financial industry was positioned themselves.
Right.
Yeah. Did this have anything to do with a massive increase in margins?
Of course, the margins will also increase, but it doesn't change the perception of the traders, the retailers. These are thousands of retail traders which have access to each other's data, right? So they do not rely only on a handful or a dozen of market analysts. They rely on, they can data mine data from thousands of traders, and that gave us the idea that they are being able to position them a little bit better, or maybe according to people's sentiment rather than to experts' advice, whereby they might be caught totally off foot.
So the transparency that you have in your platform actually helped the people trading on?
In this specific occasion, we saw a very positive feedback from that.
Get a silly question. This was traders. This wasn't like sort of YouTube or YouGov or Twitter, you know, say, I just went long the euro. These were
No, this is actually traders.
These weren't people trying to talk their position. These were your clients being able to see exactly what traders were doing.
What other traders are doing, exactly, on an anonymous basis. So they
Yes.
could they could mine down to what are UK traders, how they're positioned in the dollar.
I'm just so anti this Twitter and stuff like that about, you know, you're going to believe hashtag Joe, who's talking his position because he's just gotten clubbed and going the wrong way on the euro.
Well, maybe next time we can discuss hashtag Joe. But for today, Dennis de Jong, MD at UFX, thank you very much for
Thank you
coming
very
in
much.
today.
Thank you.
We'll be back after the break.